So this is more of an informative, like San Diego market analysis. Maybe not so much analysis, right? But just what you see, because you see it all the time. You see it in San Diego. You see it in Imperial County.
Absolutely.
Yuma.
Right.
Yuma
as well.
Do you go up to LA as well?
I've done loans in LA County, yeah. I have.
Okay.
Yeah, I've done loans in LA County, Imperial County, San Diego County. Mainly the Imperial County, though. I'd say that's probably around 80%, but it's starting to become more San Diego just because this is where I live. So
perfect. Yeah.
We talked a lot over the phone over the past 6-7 months, I'd say, probably something like that. How's everything? Good?
Everything is good. You see my financials. So
I know all the details.
I plan on doing more business with you and everything like that.
For
so
sure.
It's always good.
Likewise.
No,
Like
so
2 years ago? I've lived in San Diego my entire life, right? And
have you?
Yeah.
Where'd you graduate?
I graduated Hilltop High School.
Hilltop High School?
Yeah, and then I went to UCSD. I studied at UCSD chemical engineering, and then I decided to do loans. I was in my third year, fourth year. I mean, with so many classes, I lost track.
Yeah, Hilltop Liquor?
Yeah, of course. Yeah, of course I know that.
Yeah, I used to hang out there a lot.
Oh, okay.
My mom was dating the owner.
That's funny.
Do you remember his name?
No, I didn't know it that long ago.
Yeah. I forgot his name. But anyways.
Yeah.
Yeah, and they won the lottery there. Remember that?
Really? I don't remember
Must have
that
been
at all.
13, so like 23 years ago or something like that.
Oh man, I was 4 years old. So
all right, yeah. They won the lottery there once. Anyways, all right,
Okay,
let's stay
that's
on
awesome.
track because I want to keep this to like maybe less than an hour. I think it's gonna
However
go.
much time you
Okay.
yeah.
So you studied mechanical engineering?
I studied chemical engineering.
Chemical engineering.
Yeah, chemical engineering. I love engineering. I still love engineering. But I always had, I tried to switch my major to finance one time.
Yeah.
And then I decided not to. But I always liked finance. So I decided to do loans. I started out with my cousin Braulio and now I'm going on my third year with him, and it's been great. I mean, as well, the real estate market has been amazing to us. So
it's busy.
Yeah, it's busy, but now it's changing, right? I mean, I know you've seen it.
Yeah, so what are you seeing? Like, update the viewers. What are you seeing in the San Diego market, Imperial County, California, essentially?
Right.
California.
It feels like it's happened over maybe. It feels really quick, the change, right? The adjustment was almost night and day, and it became a market, a buyer's market, in the sense that you don't see sellers paying over appraised value anymore.
Right.
That was incredibly common. You had to make an offer that was,
exorbitant.
15-day close, 100,000 above. I'm sure you saw some crazy deals.
Yeah.
We don't see that anymore. Now we see the opposite, which is sellers giving up their equity to help out buyers, and it's been night and day. And so, pros and cons, like everything in life. The market back then, sure, you'll get a very low rate, but now it's the rate's higher, but now you don't have to fork out tons over appraised value. So it's been a night and day shift. Pros and cons, like anything in life, but now I see some buyers getting some great deals out there, just because the market's completely shifted, right?
Yeah, so we're seeing a lot of seller concessions, right?
Right, a ton. I'd say on practically every other deal that I see, we're seeing so.
Okay, so do you see like on average 6% on an FHA and like 3%?
I'm not seeing 6% yet. 6% I've seen 3 or 4 times in the past month. But yeah, I am seeing higher, 10,000 plus, and it depends on loan amounts, right? The Imperial County's loan amount is much smaller than not much, about.
County loan limits or?
No, just the average loan amount, right? We're talking about different prices of homes. So
definitely.
A seller concession here in San Diego, you're expecting a lot more because it's really based off percentage of the sales price.
Really? Yeah. Okay. Because I got in Yuma, what was it? We're trying to do like 6%.
Yeah. And you see,
I try to hammer it.
You see strong realtors that are able to get their clients, in your case, some very great concessions, and that helps a lot. You can use that, to obviously buy down your interest rate. However you want to do that, there's a billion ways. But that's the great thing. I mean, there's pros and cons to anything, and that's the thing is people, I think, get caught up on it's never a good time to buy. Back then, I had people telling me, hey, it's not great because I can't get my offer accepted. I'm bidding way too much, and the rates
2021, 2022.
Exactly, right. That's all I heard. I'm gonna wait till it's a better time. And now you don't have to do that, and then the rates are high, so you're gonna wait till the rates go down, right? So
They say marry the home, date the rate.
There you go. Yeah.
Yeah.
that's the saying. So that's what I've been just seeing. It's a different world.
Yeah, and often people tell me like, or ask me, when's a good time to buy? And I say it's not about when the time is, but whether the deal makes sense.
I think that's what I preach to everybody. It's like,
Okay.
it's a case by case thing.
It's
right?
a case by case
Right.
thing, and the numbers work out.
Exactly. And people are like, I'm gonna wait. And then what happens a lot too, and I know I've seen it, you know, I'm pretty sure I saw it with you in one case, is you have people not willing to get pre-approved because they're just gonna wait. And they wait without knowing what they qualify for, without knowing what their monthly payment would look like. They're basically waiting until you know, some number in their head. And so I just think you know, the best thing to do is be ready for an opportunity, especially right now. It's like,
well, the worst thing is like when you wait for an opportunity, it presents itself, and then you run out of time.
right?
I
Yeah,
know.
exactly. That's the
It
case.
sucks. It
Yeah.
really does suck. And then now you have to like, you miss your opportunity. Now you're waiting again. You're discouraged. So the best thing to do is get pre-approved.
Right.
And then just hang on tight. No.
Right. Absolutely. It's
And renovate every 3 months, right? Because it's good for 3 months.
Oh yeah,
Pre-
it's
fall?
good for 3. You know, it depends on the jobs. Some jobs are, you know, dependent on overtime, different income, you know, types of income. When you're on a salary, you know, yeah, we like to get your documents updated, but in general, I mean, your income doesn't change
Oh
all
yeah,
that much.
Salary
right?
versus.
Yeah. But the rule of thumb is, every 3 months we want to just keep checking up and making sure everything's good, because sometimes, you know, people are on borderline credit scores, for example, right? You're in the
620s?
Yeah, or thresholds that really matter. For example, if somebody's at a 634, being at a 640 changes your loan terms drastically. And
Really?
so it really
From a
does.
620 to 640?
Those are when you make the jump to 640. That's how credit scores are, or interest rates are
tiers, right?
determined. Yeah, exactly. It's 600 to 620, 620 to 640. Every 20 points.
Oh,
changes.
is it?
Yeah.
Okay. What's
So-
tier 0? Is it?
I mean, you can get a loan done with 580. I always suggest raising your score because your terms are just not
Terrible.
beneficial. Right.
Yeah.
And those 20 points are very easy to increase when you're in those lower scores. So
Yeah.
Yeah.
Yeah, sometimes you just got to go log into Equifax,
Yeah.
dispute the right, dispute the loans or whatever it is, and sometimes
Yeah.
it just cleans it up all by itself.
You know, it's not that simple because, you know, mortgage companies
Really?
are smart. What they know is that when you dispute an account, and many people do that, I'm disputing that account, so, you know, don't worry about it. But we do worry about it because mortgage companies will sometimes require you to remove the dispute. When you dispute an account, it's not taken into your credit score at all. They don't take it into account.
Right.
It's like it doesn't exist.
Well, it's got to be taken off.
Right. Well, when you have the dispute, it's like your credit score is not realizing that, for example, if you paid a card
Nothing's changing until it's finalized.
yeah, well, it's not even taking it into account.
Right.
And so the moment you remove the dispute, all of
I
a sudden
gotcha.
it does, and so your score drops. Right. Yeah.
Oh, really?
Yeah.
Oh, yeah, because you actually actualize it.
Yeah, exactly right.
Yeah, that's right. That's
Exactly
right. I've
right.
seen that. You actualize and then you screw yourself over.
Yeah, because if you paid a card late and you dispute it, well, your credit, it's unaffected, right?
Right.
But mortgage companies are going to tell you, hey, remove that because we know what happens to your score, and sure enough,
Yeah.
score goes down.
I
Or
ran into that
sometimes
one time.
I've seen even people dispute great accounts. That they have an account that they've paid on time,
Mhm.
they don't owe much on the credit card.
Yeah.
It would help their score drastically, and they're disputing it. And it's like, what are you doing? You know?
Oh,
And so,
that sucks.
Yeah,
Yeah.
so I've seen both sides. So disputing accounts is a tricky subject.
Yeah, it is. That's right. It's like ballet. It's an art. I've seen it too, like where you have awesome credit and everything, and then at the very end you miss a payment or something because you're moving.
Yeah, that's tough.
And then
That's tough. It's reality. I mean,
Yeah.
it
You just gotta
happens,
stay on
right? It's all about consistency, trying to keep everything paid on time, and getting those scores up because especially in those 580s ranges.
yeah, especially when you're starting out small, you only have like 1-2 accounts or something like that to worry about, then you're good.
Yeah,
Unless
exactly.
you're running like a my end, but you don't see the commercial stuff, right?
No. Typically we don't. It depends what comes out on your credit report.
Okay.
A lot of business owners find that.
Which is usually personal credit.
Correct.
So there's a difference between personal and commercial.
Right, absolutely. And sometimes it is tricky because I've seen people, like I mentioned to you in the past,
Right.
when they do a certain type of loan, they think it's not going to appear, and it does appear on the credit. So you just have to really, it's a
Make sure
case by
it's-
case.
Yeah, make sure it's a reputable company. Make sure that's commercial loan.
For sure. Yeah.
BHG, have you ever seen that one?
No, I haven't actually.
Good. All right. So, what kind of changes have you seen in the market aside from obviously seller concessions in favor of the buyer? Yes, we are seeing I don't even want to, you know, the 6 and 7s just don't really scare me.
Yeah.
Because they're kind of the norm.
Right. And you know what? It doesn't even, I don't think 7s are all
That
that
bad.
common or
Or-
that common. You know, I
We're
mean,
seeing
7s,
6s, right? And 5s.
yeah, it depends on the loan type. Investment properties, you will see the higher ranges. So
Right.
it's all on risk, right? Mortgages are basically a company analyzing the risk of lending money to you.
Yeah.
And so higher the risk, higher the rate. But on low risk loans, you know, for standard conventional loans, FHAs, you'll still be able to get a 6, even a 5.5.
Even a 5.5.
Yeah, today I priced out a loan conventional
Did you?
5.5. Yeah.
With concessions?
With concessions, they helped to buy down the
3%
rate.
or
The one on this one was it was a small concession of $5,000. Yeah,
5.5?
yeah,
That's doable.
it's great.
Yeah.
Yeah,
Probably 5% down or something like that.
yeah, it was 5% down
Conventional.
Yep,
Yeah, those are pretty great.
those are awesome.
Yeah. What do you think of the San Diego market? Do you think prices are going to continue? Actually, prices are increasing.
Yeah, slightly, right?
Yeah,
Prices
slightly.
are increasing.
But we do see these drastic cuts.
Mhm.
So it's kind of hard to measure like if they really are increasing, because I think the price point is usually what, 650 in California,
Around there. Right.
or Southern California.
Mhm.
But who knows? Because I don't know. Have you seen the MLS statistics or
I
anything?
haven't taken a look
Okay,
yet.
okay. No worries, no worries. Yeah, I took a look at it, and it seems like it's dropping slightly, but the condos are going up because the purchase price.
Right.
Are, but what's kind of the sentiment that you're getting out of all the loans that you're closing?
You know, it's
Have you seen a change in price?
yeah, absolutely. But
Yeah.
you know, prices are changing. You got to think about it. When you give a seller concession, really for the seller,
Okay.
for me it's the same. If I'm going to sell you at $500,000, for example.
Okay.
I want
$500,000.
to sell you the home at a price of $500,000.
Okay.
I can sell it to you at that, but if I know my home appraises for 510, then I can give you a seller concession of 10,000 and raise the purchase price. And so a purchase price isn't really an indication of how much a seller is willing to give up of their equity, you know? Because for them, a $500,000 price, that's one scenario. Or doing $10,000 seller credit on 510,
Right.
for the seller, it's the same amount of money he's getting.
Right.
So prices are really inflated right now because of seller concessions.
And, and that's the thing,
Yeah,
right?
right.
It's exacerbated.
Right. But that's
Yeah.
not a clear indication of how much money you need. Just because the price goes up, with a seller concession, you can end up coming in with a lot less.
And I think that's why we're seeing a price increase.
Yeah,
So prices aren't really coming down.
That's what I would say.
Well, at least in November, because that's the latest that came out.
Right. But that's what I think. Prices are not a great indication of what's really going on. I think what's going on is sellers are beginning to be more willing to give up some of the equity after they sell the home. That's what seller concessions are.
And that's how I price it too. Like on my properties, I kind of price a little bit lower. I know it's going to appraise higher. Well,
Yeah.
you know,
You hope.
you hope, right?
Yeah.
Or with some experience, whatever.
Right.
And usually it does come in.
Yeah, exactly.
Right?
Right
And-
now it's good because we're getting the, you know, maybe
Yeah.
it's some latent values from last year, right?
Yeah.
In terms of you use comparables in the area and the recent sales are still very strong. So
Yeah.
you still appraise homes. Home appraisals are still coming in pretty good.
Pretty high, pretty
Yeah.
good. Yeah. So you know what I seen in Calexico,
Mhm.
Imperial area, is like 200s and 300s again.
Oh yeah,
Right?
that had gone away for a little bit.
Yeah, so they kind of did come down, but I remember they were usually around like the high 3s and 4s and
Oh, yeah.
5s, and
Yeah, anything in the 2s didn't exist last year for sure.
but now we're seeing it.
Now we're seeing it. Yeah, I got there's a home in escrow right now, 270 last week. It's great.
Regalado.
Yeah, are you kidding me? Yeah, probably somebody who in a couple of years is going to be looking back and say, you know, I got it for 270.
Yeah, right.
Right.
Oh, but the rate was high. No, it's not really.
Right.
And then in San Diego, I've seen around 4s and 5s more frequently now.
That's awesome as well.
Worse conditions, but
Yeah.
I mean, still,
Right.
You know, have you seen any of that?
You know, in San Diego, I haven't in the recent months.
Mhm.
I haven't seen 5s or in those areas.
Yeah.
Actually, you know what? I saw a 545. I did a loan here in San Diego. It was a
545.
down payment assistance loan. The
DPA
Yeah.
in San Diego?
Yeah.
We're at Alpine or
It
Descanso
was
area?
in Ramona.
Ramona.
Yeah.
Classic.
Yeah.
Ramona Julian.
It was awesome.
Wow, you can get a DPA? So can you explain DPA?
Yeah, down payment assistance. So it's
Who can qualify for that? I always get that.
first time home buyer, right?
What's the threshold?
As far as what?
For qualifying for a DPA? Is it 18,000 single mom, one child?
Oh
or
no,
what's-
no. Well, so the thing, you have to be a first time home buyer, right?
Okay.
That's number one.
All right.
And number two, your credit score has to be at least 640.
Okay.
Right. That's
doable.
Yeah. And really, what the problem is with down payment assistance loans is that their debt to income ratio is lower.
40
the max
or 30 or
allowable.
what?
Right. It's 45.
45.
Right.
Okay.
So 45 is the basic rule of thumb on most DPAs. And
Okay.
so what happens is that since it limits your debt to income ratio, it limits how much monthly payment we can give you, the max we can qualify you for, which in turn means you qualify for less price.
Yeah, and
That's
that
the-
subjects the seller to accommodate their needs, the buyer's needs.
Yeah, of course. Well, we have to bring down the price because you don't qualify for all that much. Now,
Right,
in
right.
some cases, the math works out to where we can do down payment assistance, and what that is, it depends which type. Sometimes they're grants, sometimes they're loans.
Because there's California grants,
Correct.
there's county grants,
Correct.
but they're not grants.
Some are grants, some aren't. Right. So, some are. Yeah.
The ones I've seen, they're always liens.
And those are the most common, by far the most common.
Yeah.
Right.
So where do you see
Some
the
are
grants at?
forgivable liens. After 5 years of living at the home, they'll give it.
Oh,
Those are not
like the hero loan.
Yeah, it's the.
Is it really?
The GSFA?
Okay.
The GSFA is a forgivable grant.
After 5 years,
After I forgot how many years, I haven't done a GSFA in a very, very long time.
is that like school teachers or
No. It's similar to the Cali HFA. The Cali HFA is the most popular.
Califiche? That's very
Yeah,
popular.
that's
yeah.
the most popular.
That was on the exam.
yeah,
Exactly.
exactly.
No,
So that one is it's popular, and that was the one that I did. I did a Cali HFA. The borrower had their first regular FHA lien, and then they had a lien that helped them with the down payment. And then they had closing costs, which is all you have to pay in the down payment assistance.
Okay,
But the
just closing
seller helped with the closing costs. So now
So it was almost
borrower comes in with very
nothing.
little money. Yeah,
Wow, that's awesome.
it was great.
What were the requirements to qualify for that? The Califiche.
That was it. It's the
First-time home buyer?
First-time home buyer. Their score was above 640, and their debt to income ratio was below 45.
Okay, so a first-time home buyer can actually be a first-time home buyer,
Mm-hmm.
but as we know, you can use the FHA or the VA over and over again.
Oh yeah.
So can you still use a Cal FHA like say in Monterey, then San Diego, then Imperial? Or...
Well, you can only use it once, right? The first time you buy. That's the thing. The
Okay.
FHA loan is not limited to first-time home buyers.
Right,
You
but the
can
Cal
use it-
FHA is
yeah, that one
specifically
is
with that
specific.
GPA. Okay.
Correct. Same thing with USDA. You can't have a home before doing the USDA.
Is there like after 5 years or 10 years you can use it again, or it's just one time? That's
There
it?
is a limit on the years because I know after I think it's about 5 to 7 years, you are considered a first-time home buyer again,
A Cal FHA, right?
or just in general for
FHA.
yeah for any loans.
Okay.
Yeah.
What if
After
you-
not owning a home, let's say you sell your
Yeah.
home 5-7 years later, I believe you're considered a first-time home buyer. again.
There's always like some type of like threshold or waiver when it comes to loans.
Right.
So it always like
Yeah, correct.
you always got to ask, because it's not like
Right.
just a straight
There's
answer.
a lot of programs,
Yeah.
a lot of loan programs, and I think the main thing is borrowers. You get pre-approved to check all these programs. See which ones you qualify for, because not just because you qualify for something means it's a good idea.
Is it hard to get approved for a DPA? Because I have a
No.
lot of people. Everybody
No.
wants to get qualified for a DPA.
It's not.
but they're making $50,000, $60,000, $70,000, right?
It's not hard to qualify. You qualify for something.
Uh-huh.
Is it a price that you're willing to find a home?
But
for?
do you see all of that all at once, or when you go conventional, you go conventional? When you go
No,
FHA,
no,
you
no.
go
We
FHA.
look at all of them.
Where you plug it into a program, you got
No,
everything.
no.
Yeah?
I have a program here where I
Uh-huh.
go through each loan and I say, okay, qualify for this? Okay, yes.
Okay.
Okay, here? No. Okay. And I
All
see
right.
all the three, and then I tell the borrower, okay, well, you qualify for these 3 loan programs. Here's the pros and cons, because everything in life has pros and cons, right?
There's nothing has no risk.
Exactly.
Even when we drive a car, when we wake up in the morning, when
Yeah.
we go walking, everything
Absolutely.
has a risk.
And so
And we don't see it that way, but it's true.
what ends up happening, every case is different, but some people end up finding that a regular loan, FHA loan, they say, you know what, I can get the money together for the down payment, and
Yeah.
my rate's going to be lower than a down payment assistance loan. Down payment assistance loans have a little bit higher rates, and so
Oh, do they?
it's like a 6.125, not even that bad. Right?
Well, because you're paying money on the DPA, right?
because the Cal HFA has a set rate. If you go into
But it's low. It's minimal, right?
Yeah.
It's like a quarter, half a point.
Oh no, I'm saying your
Uh-huh.
your first lien will have a 6.125, and the second lien has a 1% interest rate. It's very low.
Yeah, very low.
Yeah,
Hmm.
exactly. But
It's like the VA loan. Like, yeah, sure, you don't come out of pocket. Yeah, the
Yeah.
payment's lower, but actually the loan is more expensive
yeah, exactly.
at the long run,
In the long run, right?
depending on the interest rate.
General rule, and I tell this to all the borrowers I speak to, is If you can come up with a down payment, do it.
Just do it.
Just do it, right? Don't. Some people.
Unless you're gonna do business with it.
Yeah, well,
Right.
yeah. Unless the money,
But
you're gonna do better. somewhere
Generally
else.
speaking, yeah,
A lot of first-time home buyers say, "I want the down payment assistance. I want it.
they think it's better
And they may not realize
because
that.
they think it's free money.
Yeah, some people think that
Yeah.
you're not trying to help them, but it's like, no, I'll offer it to you. But I'm just telling you,
Yeah.
At a certain point, we see a lot of loans, so we can give.
You see the money, you see how it works. I see how it works all the time too.
Right.
And DPA sounds nice, but it's actually more costlier. So there's no free money.
There's no such thing as free money, and
There's no such
I'll be
thing
the
for
first.
Yeah.
Contrary to a lot of lenders' beliefs, there's no such thing
There's
as
no
free.
such, yeah. Unless it's forgiven, right?
I guess.
But
yeah.
you still pay interest on it.
You will still pay interest on it, correct? And generally, I
Free
mean,
money.
those grants, I don't see a lot of those happen. Also, the reason down payment
Yeah.
assistance loans here in San Diego aren't
Okay.
that common is because they take a little bit longer to close.
Right.
And
60?
No, you can get it done in like 30 days.
Longer to close? 30 days like typical. What
Yeah,
are you
well,
closing in 20 or 15
In San
days?
Diego, they love their 21 day escrows, yeah.
You know, that's right. Yeah.
So over here, if I have somebody who
That's
can close,
crazy, isn't it?
I think for 7 days.
You know what it is though? You know how they're actually closing in 30 and 45 days.
Right.
But they're leveraging their own cash that they have on the side
Okay.
with their own banks.
Okay.
And that's how they're able to close it on time.
Oh, yeah,
So
I've
they
seen
fund
those.
it,
I've seen
but they're
those.
still working on it in the background.
Right.
But there's a lot of money here in this area.
Yeah.
Yeah.
It's two different animals, right? One.
Yeah. Have you heard about that?
That's
That's how they close it though. Like they,
right.
they self-fund it and they
Yeah.
then they really close later
Right. Some are like
or sell it off.
types of bridge loans, I believe. That's
Oh,
what
okay.
they're yeah.
Oh, bridge loans.
Yeah.
Oh, okay, but that's
That-
commercial.
That's kind of what they're doing it for residential.
What?
Yeah.
Is that new?
Yeah. It's
Is it new?
It's
Or not new, but like it's picking up again?
It's picking up again, yeah. Some
Why are they doing that?
Some lenders are they'll like buy the property while you go and like pay buy the other home.
Oh.
Yeah.
Hmm.
Mm-hmm.
So there's a saying in lending, right? You don't lend to hold, right, or something like that.
Yeah, I guess
I mean that's a precarious
you
situation.
lend
Putting
to
themselves
sell
in
up, I guess.
because they're buying it now.
Right.
It's their inventory.
Right.
Mm.
That's what I thought as well.
But you can write it off.
I said it's risky,
But if they're making money, they already know their business.
Right.
They probably have the So.
but
they
yeah,
can
I've
accept- they
heard
can
of
assume that risk.
lenders doing. being able to
That's
do that.
interesting.
Yeah.
Wow.
It's cool because you had a lot of buyers who were like, trying to sell. They couldn't sell, and so now they're waiting on they sell to the bank and they're able to go buy it.
Yeah. Okay, so this might be personal, but why did you switch from SFG to Mac?
SFG to Mac.
If you can talk about it.
Let me see why. Yeah, I don't think you can necessarily go. I mean, I'd love to change right now that we're at Mac Mortgage. Mac Mortgage has, I would say, probably
More banks,
double,
more investor.
triple the banks, right?
Yeah.
The programs too.
More competitive.
Where we can do every single loan. there
Are you
is.
seeing better funding with Mac versus SFG?
Yeah, quicker. I would
Quicker?
say for sure. And it's just because of the banks we have access to now. you
So
know.
how do you better from Quicken Loans and Rocket Mortgage and all that?
Oh well, very simple. Number one, I mean,
Let's see some.
yeah,
So what do you
you
got?
have me who you talk
Okay.
to every day, and I don't stop working. I mean, David.
Pretty much
knows.
family.
Yeah, I mean, we speak to the clients all the time, guide them through
In our area.
Yeah, exactly. In multiple languages. I mean, I think that's where
Spanish.
yeah, we speak-
Filipino.
there you go.
Spanish.
that we love
Yeah,
to
that's true.
our community. My community specifically
Uh-huh.
is very. Nobody knows about mortgages. I think that's something that the reason
Nobody
why
knows about what mortgages.
mortgages. Yeah, and
Your community?
Well, in the
your
Mexican community, they're
Oh,
scared
okay,
of.
okay.
I for example, my one of my grandparents.
Everybody thinks someone's predatory, right?
Yeah, exactly, and I think that's.
That's kind of sad.
It might be also.
I mean, I get it. I was there too.
Yeah, 2008. It's it scared a lot of people, and rightfully so. I mean, for somebody like me
Yeah.
who wasn't in it back then,
Yeah.
I just hear about the stories, and I hear it from buyers all the time that they just like, oh no, they messed me up this time. They would make me sign things I had no idea what I was signing, and that to me is like the worst in the world. I want people to actually know what their mortgage is. It's the single biggest loan you probably will ever take.
Yeah,
Right?
yeah.
If it's that you only buy one home, which we hope.
I love your
is the case.
emails too,
Yeah.
because his emails have like all my questions. And then,
Yeah.
like in one scenario,
Right.
like if it were no points,
Right.
and then with points,
Right.
and then with more points.
Right.
So
I love
that's
to give you options.
really good.
Because
I like that.
every borrower has a choice, right?
Yeah.
And I may not show you a choice that maybe you liked, right? And so my
That's
job,
another thing. It's documented.
my
as well.
job
I
is
love
to
it.
present options and
Yeah.
you pick. And I think that's really strong. I think
That's pretty good.
between giving options and explaining what you're saying,
Mm-hmm.
I think that's really where, and you know, not to
No,
just
go for
sell
it.
my services, but it really is why I differentiate from, for example, Quicken Loans or somebody who you're just clicking through an app, you're just submitting documents with no
You
explanation.
don't know that person.
You have no idea what's going on, and it's funny because you're gonna give the biggest financial decision of your life in the hands of an app or even somebody that doesn't take the time to explain.
That's the culture we live in now, right? The swipe culture.
Yeah, exactly. Or to not want to speak to somebody. I run into, and my generation hates speaking on the phone. You know?
Yeah?
Yeah. That's
Yeah,
the thing.
when I
Everything's
have to
through
get
text
something
and-
done, I have to call.
Oh, me too.
But I try to do it like on emails, but sometimes I get fed up with it. I really
Yeah,
do. Like
yeah,
sometimes I just want to like walk into an office. I want to talk
yeah.
to somebody. You know,
Yeah, for
it'll
sure.
come back, just like watches. They'll
I
come
hope
back.
so. Yeah, like vinyls. Yeah, like vinyl
Vinyls,
records,
yeah, they're coming back, man.
Yeah, but I love the phone, being on the phone as well. I think now even in person. I mean, luckily on the lending side,
Yeah.
last year was a lot of volume. It's hard to see everybody in person.
Mhm.
Now, with your real estate partners, you can
Yeah,
see them,
face
meet
to
them in
face.
person, face to face. You can look at me in the eye, and I can show you numbers, and you'll see that there's nothing being covered because you
Yeah.
hear some stories about 2008
That's a good
where
thing.
everything was just like sign here, sign here.
But
blah,
everything
blah.
was disclosed, right? Like you
Right.
had these adjustable rate mortgages, but it was disclosed.
It was
right?
just lack of information. People,
They just sign it off, and then the rates kept on increasing. And I think it's education too. You got to be
Yeah.
on it. Just because you sign for a mortgage, don't expect everything to be good. You have to be on it,
absolutely right.
just like with anything.
Yeah, absolutely. But do your research as well. I love when borrowers ask me questions because, I like to answer most of them. I know most of them, but maybe I deal with some very smart borrowers or some that will ask me a question and
What's one that threw you off recently?
Recently, a question that has thrown me off.
Hmm.
I think it was a question about amortization. Amortization is how much of your payments going towards principal.
Did they
how
want
much
to know
towards
the
interest.
equation?
Yeah. Well, I know the equation.
Yeah, yeah.
It's I know the equation because of math. I've
Right,
taken
right.
a lot of math.
Oh,
but-
that's right.
Yeah. But no, they were asking during a certain amount of time how much would, and I mean for that I really had to go in and take out the calculator because there is an amortization calculator.
Because it's not a bell curve. It's more
Yeah,
front
it's like-
loaded interest,
Exactly right. Yeah, of
Yeah.
course. In the beginning, people
which
see
I
it-
think is predatory.
I think so as well. I'm not,
It should be like a car loan
of course. I mean that's how these mortgage companies make money at the end of the day. Right?
because they know 3 to 5 years they're going to move out.
yeah,
on average.
most people will sell or refinance within the first 3 to 4 years. So of course you're going to make sure that very little is going towards the interest. It's just what it is.
Yeah.
That's the truth.
I mean, they don't have to lend.
They don't have to lend, right?
They don't have to lend.
Yeah, right. But
So-
people need
People need
most
money.
people don't have money to buy a home cash, so that's our reality. And now it's how do we get the best from these mortgage companies that we can, right? And
Yeah.
I think
It's amazing that we saw. Did you see a 1% mortgage rate?
I saw 1.99. That's what I saw.
Ooh, 1.99.
Yeah, 1.99.
When was that?
It was probably late 2020.
Late 2020?
So yeah.
Oh yeah, December, right?
So, yeah,
January.
December was.
I remember that. That was nuts, wasn't it?
It was an incredible month, yeah.
Yeah.
And I saw it was a 15-year refi where we went down to a 1.99, and I think the borrower, their payment didn't go up, and we knocked off a ton of off.
Did you refinance immediately too?
Yeah, of course, everybody, and that was like an amazing time because we were doing like upwards of 20 loans a month, and rightfully
20
so.
loans a month.
People
Wow.
people who had rates that are like happening now, right?
Uh-huh.
5s and 6s and even 7s.
Yeah.
You'd refinance them to 2%. You'd
Mhm.
lower their term, lower their payment. It was like
Okay.
yeah.
Would you suggest? I'm of the opinion now
Mhm.
that if you're gonna refinance, you got to refinance. I mean, for business, it's good to refinance every point,
Right,
right?
right.
But it's expensive,
It is expensive. Absolutely, it's expensive.
Right.
Well,
so if you can afford it, just wait.
right.
I mean, you can refinance 4 times, or maybe what, 2, 3 times, maybe 2, from 5 to 3 or 2.
Well,
if
you
we ever
can-
get there again,
I guess-
we will, right?
Yeah, you can refinance as long as there is a tangible benefit. You can refi.
A benefit.
Yeah. Now there's some people who come to me and they say, "Hey, I want to lower my payment," and I do the math and I find it just happened. This is why I'm
Okay.
saying this specific example.
Alright.
Somebody came to me. They said, "Hey, I want to refinance."
Uh-huh.
They bought maybe I think it was like a year ago.
Okay.
They want to refinance now, and I said, "Okay, I'll do the math. I lose nothing with doing the math." I kind of figured it wasn't going to be a benefit, and sure enough, yeah, we can knock down the payment.
Monthly payment.
Monthly payment.
Increase the cash flow.
Right, exactly. We can knock down the payment, but it wasn't something that was worth it. It was very little.
Oh, like $20.
It was
or
their
something?
primary home, and we knocked it from $100 basically. Knocked
Yeah.
$100 off the payment. Here they were increasing the loan.
But to some people, it might make a difference.
Yeah, and I was
You know?
honest with them. I said, hey, you know what? It's
Scary
$100.
finances.
If I were you, I wouldn't do it if I can keep paying. If $100 is
Right.
Yeah.
Because sometimes it costs like 5 to even 15,000 to refinance, right?
Yeah, and the thing with a refinance as opposed to a purchase is you can finance closing costs, and so most people
You
will
just roll it in.
tack that onto the loan amount, and now
Yeah.
your loan amount increases, right?
Right. Have you heard of recasting? Of course you have.
Yeah, of course.
Okay. What's your opinion on that?
The recasting of the loan.
Yeah.
Are you talking about the same thing I'm talking about?
What are you talking about? What do you think?
Is it like a buyback? Is that what you're talking about?
What's a buyback?
When a mortgage company buys back a loan, or recasting like a.
Wait, what's that? Explain that one.
Well,
Buyback.
that a buyback is.
That's a foreclosure, isn't it?
No. So a buyback is when a mortgage company does a loan,
Uh-huh.
right?
Okay.
And then something comes up, some information comes out. For example, if you have a borrower that stated something on the application, and then that turns out not to happen,
They're going through bankruptcy.
yeah, they have to buy back the loan.
Well, they have to buy back.
Yeah,
the
so
loan. 'Cause it probably violates the
let's
policy
say-
and insurance
yeah,
and all that, right?
Let's say UWM sells the loan to Fannie, then they have
Okay.
to buy back the loan, and they incur the risk of whatever's going on.
So they actually, they buy the inventory, right?
Yeah,
Does
which
that
is not
happen?
good.
Have you seen that before?
I've heard of it, but it's not. I've never
You
been
haven't seen it?
close to it.
That's good. Because your underwriting is good.
Yeah, exactly,
Yeah.
right. And we have companies that will check every last detail, and and that's the thing is they want to make sure that you don't buy back loans.
Right, yeah. Because then they'll run out of money and then they can't.
Right.
Yeah.
Recasting though, are you referring to like changing the term of the rate to a 40-year? Or?
Yeah, so let's say you've paid down like 10 years,
Mm-hmm.
right? And then instead of refinancing,
Yeah.
you could just recast it for like $100.
Okay.
And then that way, instead of, essentially you're gonna pay more, right? But you're going from a 20-year term to like a 30-year term. So let's say it's 100,000, you paid over 20 years, or 100,000 over 30 years.
Yeah, loan modification probably. I think that's
Okay,
how we
okay.
refer to it. Yeah.
Alright.
Yeah, it's okay. You can do a loan modification. There's some rules if you want to refinance out of the loan modifications. You have to
Mhm.
be on time. A lot of times, loan modifications happen a lot during COVID.
Yeah.
People stop paying their monthly payment and they tack it on.
Forbearance, right? We saw
Essentially
it during
forbearance.
that,
Yeah, that was very common.
Have you seen that? Like where there was a predatory couple. I want to say predatory because the people are in a bind.
Mm-hmm.
I know one client who had a VA forbearance,
Mhm.
right? But there was a corporation who bought out the debt,
Okay.
the amount of payments, and then if you didn't pay it within like 180 days, 6 months, then they would just foreclose on you, and you signed off on it.
Really?
Yeah, you seen that?
I didn't hear a case like that. No.
Yeah.
I saw cases where people, did a forbearance and were not aware that that money's still owed, right? And so they'd want to refinance.
But it's a disclaimer. It's a notice.
Yeah, I know, but and this is the case I find a lot.
Well, people see a lot of free money thrown around, right? The
Right,
government just
or they
pays
say,
it.
oh yeah, because of COVID, I could just stop paying my mortgage
right.
and it's gonna go
Then
away.
COVID's gone.
Yeah, and COVID's gone. It's been I've seen a lot of people not informed about what's going on in their homes, even homeowners.
Yeah.
I see a lot, obviously, in first-time home buyers.
Mm.
That's normal. You've never been through a real estate transaction,
Right.
but some homeowners are very unaware about.
It's tough being a homeowner.
Oh,
it's tough
absolutely.
managing finances.
It's tough, absolutely.
Oh yeah, like
Yeah.
it never ends, dude. I'm tired.
Well, you
I'm
should know.
tired, But
How's been
but
your
it's
experience?
good. It's good responsibility. Good, we have a business.
And I'm
it's
curious.
successful, it's
I've been
fun.
wanting to ask you.
What's up?
Independently
Go
for this,
for
yeah,
it.
but
I can edit if
how have
it's
you
the
found
first
it
stuff.
as a tenant? Because
How do I find it
not,
as a
not
tenant?
as a tenant. I mean, having tenants,
Having tenants?
having rental properties,
Uh-huh.
things like that. How have you found the market? Has it changed at all? I mean, because this is what we would think, right? As lenders.
Well, I
is-
got myself out of a certain threshold.
Okay. Okay. In what sense?
So my rent rates are around $2,000 and up.
Okay. That's awesome.
So that's it's a different, you know, it incurs different problems as well.
Right. I'm sure.
Right.
I'm
But
sure.
I think it's how you structure it and how you mitigate your risk.
Mm-hmm.
Because you can go all willy-nilly and just buy any kind of property,
Right.
and then you know, it could be a headache.
Right.
So how I've seen, yeah, rents have been gotten stronger. They've been getting stronger.
And that's also.
I mean, just Section 8 alone.
Right.
You can just go on Section 8 and see how the rates are, or the vouchers are going up.
Oh, that's awesome.
Yeah, Tucson's going up, Imperial Valley's going up. They've always been going up.
And that makes
So,
sense, right? Rates go up, people's payments go up, and
Mhm.
so likewise rents are going to go up as well. I mean,
Yeah.
that makes perfect sense. And so
What about-
I think it's a good
uh-huh.
time to be a tenant or
A renter.
renter, right?
Yeah.
I would think so. We just saw. I mean,
And if you're a renter, it's good to time the market so you can jump into
yeah,
something, right?
yeah, right. A 4
Okay.
unit in Calexico. That we saw that. Recently,
That one, right?
That's an
Yeah.
awesome property, right?
What was it, like 325?
Something like that.
Yeah, 325.
Yeah.
It needed a lot of work though.
It did need a lot of work, but that in last year
We were gonna flip that one, so we weren't in the market to like rent it.
Right.
Well, I was gonna do what I do very well, right?
Mm.
Like increase the cap rate.
Right.
So those rents were at like 625, and I know I can get them like maybe 850,
Okay.
maybe 900.
Right. Right.
I can do that.
Yeah.
Yeah.
If you good remodeling, I'm sure.
Yeah,
Yeah.
and then good screening process.
For sure.
Right, and then you sell it.
Right.
So we were gonna sell that. We were gonna buy it at 325 and sell it like at 410.
That's so awesome.
That was an easy one.
Yeah.
But it was too strenuous. It required too much capital.
Right.
So we just cut it.
Yeah.
Yeah,
Right.
and we got other ones. That's fine.
Right.
So we're still looking.
It had a termite damage, right? I mean, that's really the.
Yeah, I had a lot. Well, it was just required so much capital,
Right.
and then we were so extended. We have like a few properties, and that we need operational costs and stuff like that. But yeah. Oh yeah, for 320 a fourplex.
That's awesome.
What was it again? A bedroom? I don't even know what it was. What was it? One bedroom?
It was
One bedroom, one
I think
bath?
it was 1 bedroom, 1 bath.
Yeah. I was like looking at some of the pictures with some of my clients. I haven't even seen some of the properties. And I see them like, wow, that's actually really nice. Oh, it was nice.
It was.
There was one that was remodeled. Yeah.
Yeah, one of them was.
Yeah. I just look at the spreadsheets.
Yeah, I'm sure.
The numbers make
That's all
sense.
that-
Project manager. I was like,
See,
go for it. Okay.
and you know, if the
Now-
numbers make sense.
Now,
Right.
when I first started off, I remember I only had $36,000 to my name.
Really.
And that was my life savings. And I think that was my first flip.
And how did that go?
Well,
Yeah.
and then we started selling property in Calipatria.
Okay.
Calipatria is like a prison town, right?
Right.
So I didn't think we were going to sell very well there. And the first day, I don't think it was like day 0. It sold.
Yeah.
And so all these things teach you lessons.
Right.
Everything teaches lessons. You become a different person. To the point where we bought a home that was we just bought for land value, $60K.
Yeah.
198 West Orange. It was burnt. It was a burnt home. It was rubbish.
Wow.
And yeah, after that point, I just wasn't scared anymore.
Right.
There's nothing. What?
Yeah. What's gonna beat that, right?
Nothing, right?
Right.
Yeah. So majority of expenses are like 15, 30. Sometimes that one was 110, but that was a complete home rebuild with engineers, architects, planning committee, the permits, and everything.
Right.
So yeah.
Have you helped borrowers go from, let's say, owning 2 to 3 to 4 to 5? Things like that,
yeah,
or
yeah.
even from 1 to what's any success stories you like sharing?
Yeah. So I had this one client. I was gonna say kid.
Yeah.
I gotta clean it up, right? I'm not that old. 35. I got a lot of white hair now, man.
Tell me about it.
Yeah, crazy. Anyways, whatever. So he was a vet, and he had a little bit of he had some savings, right?
Right.
I think he was 23 or 22. Didn't know anything. He met me, and in the span of 3 months, I found him 2 duplexes,
Yeah.
another duplex, and a single family residence. And I think all he came out of pocket was like maybe 60K, or was it 80K?
Really?
And now he has 3 duplexes
Wow.
and a single family residence that was 4 bedroom, 1 bath that he's converting into another duplex. So essentially, he's gonna have 4 duplexes.
And the rents all cover the payment and no problem. That is so awesome. See, those are the stories that.
But you gotta have somebody, and that's why I got into it.
Mhm.
Honestly, that's why I got into it.
Right.
Because I know I can negotiate really well,
There you go.
and I have been. So
I think you also have to have an eye for opportunity.
you got to be an investor, right?
Right.
My money's in the game. I think like 80% of my portfolios, and maybe 80, 75% is all I'm in the game.
Right.
Like I put my money where my mouth is, where my money. Wait.
Yeah.
Yeah. Okay.
You said
So,
it
right.
right.
Yeah. And I think that's important when you get a real estate agent.
Right. Yeah, you want to, I always love recommending you, especially when I hear somebody's eager to invest, and because I share my goals, right? My goals, as you know, are, we don't necessarily have 401ks, and
It's a tough industry.
a lot of us is, your retirement plan is property, right? And so who better
Which is the
than-
best retirement plan?
Yeah.
I actually have a video on that. IRA versus a REIRA, real estate investment retirement account. So actually, I love it. So actually, all my clients, I try to teach them the 5-year Millionaire plan.
Yeah.
So try to get at least between 3 to 5 properties within 5 years.
Okay.
You buy a new property every year, right? You can start off with an FHA.
Right.
You can start off with conventional 5%.
Right.
With an ADU in the back.
Right.
Then you can probably do like how we're doing, right? Over the span of distance, 75. Eventually, the 5th property, then you can do a VA.
Right.
Or a hero, whatever. You just try to like use this creative financing, right? And then eventually you're on the 5th property, and you should have at least $1 million or more, especially here in Southern California, of debt, mortgage debt, that turns into equity over time, right? So the retirement babies.
Right. Yeah.
So-
I saw my.
It's not chemical engineering.
No. It's not that complicated.
It's not chemical engineering. Yeah,
I
right.
I had this one borrower. It was like it was my eye-opening moment, kind of like what you're saying,
Okay.
right? So I just started doing loans after a long time of going back to engineering. So I had my license in loans. I went back to school, and then I decided finally full-time loans.
Okay.
Well, when I jumped back into full-time loans, I had this borrower. It was in that really low rate, time.
1 and 2s.
Yeah, but this guy had investment properties. He was a borrower in Alaska. He lived in Alaska, but had 6 properties in Calexico.
I got a few buyers from Alaska.
There you go. And so this guy, he had 6 properties in Calexico, refinanced all of them cash out. He had a ton of equity. Yeah, it was
Beautiful.
Yeah, got $600K out in cash, and then from there he paid off his kids' college. He's practically retired at this point. The property still the rent covers the mortgage.
So he's still
and he got
not cash flowing, or maybe a little.
No, they are.
And he's still cash flowing.
Yeah, because they
But
were
he started when? Like 10 years ago.
Oh
right?
yeah. Started long ago, and that's what I tell people now. You're not gonna it's not gonna start cash flowing in 2 days.
Right.
It takes time to build up a good investment.
So I have a lot of family. Well,
Yeah.
maybe not family, but I have good friends who have been in real estate, and one in particular, he's a multi-millionaire.
Okay.
Lost it all, got it all back, like zero millionaire, multi-millionaire, right? Now he does laundry business in Mexico. But what he told me, and this is now, he's not even in real estate anymore. He's just trying to do something for his kids, set up an office. But what he told me was, Anthony, just hold on to the property.
Yeah.
Just hold on to the property.
Yeah. You see a lot of very smart people.
And these are our elders,
Right.
And so we just got to heed to their advice. Sometimes we see the green, we
Right.
see the equity. What that dude did was great.
Oh,
And that's the whole thing.
that's the whole game, right?
That's the whole game.
That's the whole game, and
It's not chemical engineering. It's not.
And imagine all
It's easy.
his investment properties have rates of primary homes now even lower. He got 4% on all his
Less than
cash out
threes,
refunds. And it was like,
That's
man.
it, man.
And that's when I said, okay, this is what I want to do. I want to teach people how to go from 1 to 2 to 3 to 4, and that's what I'm gonna do.
And that's actually what I try to cultivate with all my clients.
Right.
Did you see an influx of buyers this past week?
Yeah, New Year's resolutions, I think,
Right,
had a lot
right,
of
right,
real
right.
estate involved, right? Because everybody picks up their phone now, whereas 2 weeks ago, everybody's in holiday mode.
Yeah.
It's tough to get a hold of people.
But I think we got to change our mindsets. If you're going to be an investor and you're seeing this as a retirement account, retirement babies, and equity play, you got to shift.
Yeah.
Because a lot of people want to buy their home,
Yeah.
their dream home.
Right.
They want to buy in San Diego. They want to buy no repairs, no nothing. You know, so
Yeah, I think
how did you make that jump?
to as far as what?
Like, cause you saw it, right? It
Yeah.
took you what 2-3 years, and then you went loans full time.
Yeah,
Because
yeah.
you saw the benefit.
Right.
But it
More
took
than
a
anything,
while.
I saw an opportunity to educate people, right, over the knowledge that I had acquired.
Yeah. Share the knowledge.
Share the knowledge.
Me too.
And that's I think
This is what this is.
Right. I think that's what I found a love for
It's not in school.
Right. Right. Exactly.
It's not in school. This is where you get it.
There was
It's
never
probably the best education you're gonna get.
Right.
As far as finances.
Right. There was never a course in high school or in college or even an elective for mortgages, which is like ridiculous to me. And I learned
I would
about
take that course.
And you know what? You know what I found with studying chemical engineering is that
Huh.
it never felt tangible. I was solving all these problems, and it was never anything. You know, I would solve a
Human
problem.
aspect.
Yeah, I solved the problem. And it's like, who did I help? Right? I know now. You know, after graduating.
So abstract.
Yeah, exactly. At least when you're in college, right?
Right.
And I found a lane doing something where when myself and my team do a great job on a loan, and we have people calling us saying, wow, you guys are amazing. I had a lady try to drop off, you know, mole to us because she loved us so much. So, you know,
That's awesome.
Yeah. And when you get that, it's like, okay, this is what it's about. And,
Yeah.
And that's what I love is there's no question in the buyer's mind when they go, you know, when you're getting your keys, the last thing you want to worry about is, shoot, I'm not sure if I signed the right papers. You know what I mean? That's
Right,
the
right.
last sentiment you want to have. And so if we can alleviate some of the information gap that exists, then I
Yeah.
think that's really what you pay for in a loan officer or real estate.
Yeah.
You pay for expertise, you pay for comfort. You don't want to be uncomfortable in the biggest transaction of your life, I would say.
Yeah. You know what? It's hard for me to see the happiness in the transaction.
Right.
Because I guess I bear the burden.
Right.
And even in my own personal, like when I finance or when I get, you know, properties and stuff like that, I just see go, finish, wrap it up next, finish, wrap it up. But
It is.
with our one of our clients that we have in Yuma,
Mm-hmm.
she's happy.
Yeah.
And he's happy too. And I hear that joy, they get giggly. They get like, oh, we're gonna close. I'm like, and then I see it. When I see it, it gets me going too.
Yeah,
Like,
yeah, right.
Oh wow. So yeah, I wanna definitely go over there and sign with them and, you know, get a Dom Perignon.
Oh yeah, for sure.
Yeah, something special.
Sign and you do the
I don't
whole
do that.
Instagram
No.
Yeah,
I do a fancy I do a Dom Perignon, and then I do big screen TVs. I
There you
do
go.
furniture.
There you go.
I go big.
Car.
A car, yeah.
Yeah.
Haven't done that one yet. That one's close. That one's
Okay.
close. It's gotta be a bigger deal.
Yeah.
Maybe like an oldie or something like that.
That'd be great.
Yeah.
So no, I mean that's what I'm in it for, and it's cool because
Yeah.
I feel with you,
I'm passionate about
you're
it.
passionate.
I love it
Yeah.
because I'm helping people.
Right.
We really are.
Yeah, I think so.
Yeah, I love it, man.
Yeah,
I do.
And that's you know, and
I
that's
really
again,
do.
it's a tangible benefit. People have
Yeah.
learned. People when they're done with a 30-day escrow.
Once they trust you, right? Once they
Yeah.
trust you, yeah, then you can help them. But some people, you know, they're like, I don't know, you know, used car salesman. It's
Yeah.
like, they're
Everybody-
actually hurting themselves, man.
Yeah, I think I understand. You know, some people have different thresholds as far as
Yeah,
you know
different
what they're willing to
experiences,
buy.
too.
And that's
Yeah.
completely fine.
That's fine.
But
We all come from different places.
that numbers, if numbers make sense to me, it's like if sometimes a borrower is like, okay, I want this payment, I want this type of house, and we get him exactly that,
Yeah.
and he's like, oh, never mind. And you know, borrowers like that, I think some people just like to wait, and they just like to wait because they don't want to commit to an opportunity, you know. But there's
They're
always,
afraid of commitment.
They're afraid of commitment, right?
I think that's normal for anybody,
Yeah.
even our last client too.
right,
But that's where we come in.
right,
So maybe it's you know, it's an art, right?
Right.
But I'm able to, you know, educate and then give all the risk. I give all the risk.
Yeah.
If the risk looks good, and it still outweighs the benefits outweigh the risk.
Right.
If the worst case scenario looks good, do it.
yeah, right. That's a
right,
good
right.
way to think about it.
But yeah, they almost dipped out.
Right.
They almost dipped out, but I went back to the appraisal. It was 200,000, right, or more than what the purchase price was, and it's a duplex essentially.
right.
Yeah, detached duplex.
Right. It's great. It's amazing.
Yeah.
you-
And then they were thinking, oh, we got to do the HVAC. We got to spend $10K. No, the requirement is a wall unit,
okay.
$250.
No. It's easy. It's easy.
So education is part of it.
Right.
Sometimes we spiral.
Right.
We have these we got to have these anti-negative thoughts, you know. That's where I come in. That's where you come in.
Right.
Educate the public. But yeah, you can spiral out of control and just say, oh no, no risk.
Yeah.
No risk, what?
No reward.
That's it.
That's it. Yeah.
That's it. Mitigate your risk.
Right. It's funny. I was thinking about this earlier because I had borrowers that were willing to pay $20,000 above an appraised value, right, last year.
With cash?
Yeah, of course. Because
Okay,
once it's above appraised value, they're willing, and so they're going into a property that they know is worth less, paying more for it, right?
Yeah. But they love it, right?
Yeah, they love
the
it
same thing
because
right
the rate was a 3, but now that the
Okay.
rate's a 6,
And they're actually paying.
and they're paying less than what the property's worth.
Yeah.
They're like, no, because the rate's a 6. It's like, man, I mean,
So there was simple math done,
Mhm.
all right?
Right.
The math was that if you have a higher purchase price and a lower interest rate, you end up paying more
Mhm.
versus a lower purchase price and a higher interest rate.
right.
Something like that, right?
Yeah.
Did you see something like that?
Yeah, you can. Right now, I actually did.
Well, you can
math
play
on
around
it.
with the calculator, yeah.
Yeah, exactly, and you will find cases like that because, yeah, sure, my rate's this, but if my price is this,
Yeah.
then or my equity position, if I'm just putting way too much into this property and all of
Yeah.
a sudden the value is not there,
Mhm.
I mean, and so I just think you're never gonna find a time, and I haven't been in this industry 20 years like a lot of people, right, who've
Yeah,
seen
yeah,
ups
yeah.
and downs and ups and downs.
But you're a smart guy.
But what I know for sure,
You get it.
is that there's never gonna be a time where rates are low, where
Listen.
where prices are low, and where if you submit an offer, that there's not going to be 20 offers on one of these three, something will be
I'm actually
wrong.
seeing that right now too.
Right.
Multiple offers though.
Yeah, it's still happening.
Still, man.
Yeah, it's still happening.
Nothing changed.
Right, but now seller concessions, it's a good deal. I mean, I would,
San Diego's different though.
and this is
Just quick.
the truth, and they can quote me when the rates go back down. I would much rather have a high rate with a great seller credit than a low rate paying above appraised value, a billion times.
Giving up your inspection period.
Yeah. Oh my God.
Closing within whatever 20 days.
Right.
But I did manage some of that risk.
Mm-hmm.
So, sometimes I think one or two I had to do, but they were happy though.
Yeah.
But for the most part, we would do escalation clauses.
If the buyers love the home and they're willing they're willing to pay
Yeah.
above appraised
They
value
would
because they want that home,
Yeah.
who am I to argue?
Right.
But I'm just saying, on a personal note, I would much rather just take the high rate. I mean, it's gonna go down eventually, right?
Right.
Yeah. And if I'm able to make the monthly payment, that's
Right.
something important.
So you guys got to do the math. We're
Yeah.
not trying to sell here. So you guys go to amortization calculator, right?
Right.
And then you just type it in. You can go high rate, low purchase price, or low rate, high purchase price, and play with the numbers, and you'll see that it's actually you pay more
Right. Over the long term.
Over the long term, yeah, with the higher purchase price.
That's correct. Yeah, but that's where the market is now. It's a different time, different pros, different cons. But if an opportunity's there, I think
You just got to take
it's
it.
as good a time as any, right?
Yeah.
You're never gonna find. If
And
not
then
now,
buy again next year.
I had a teacher used to say, if
Yeah.
not now, when? If not, what's the
Yeah.
saying?
If
The
not
saying.
now, when?
If
Then
not
never.
you, who?
And
There you
who,
go.
yeah.
There you go. So, yeah, that is a fact. If you
Yeah.
see a great opportunity, I think it's a good time just to be pre-approved so that a great agent like you can send you a home
thanks.
and boom. You
Yeah,
love it, right?
great lender, partner,
There you
partner in I don't want to say it, not partner in crime.
Partner in helping
in-
people get homes. There you go.
Yeah, partner in business, but good business.
Right.
Yeah.
Yeah, for sure. So I would say, like we were saying about analyze what's the worst case, get pre-approved. Worst case, you don't qualify for
Yeah.
something right now, and then
That's pretty much it.
you'll
Yeah.
be ready.
So I have been seeing multiple counteroffers in San Diego still.
Mm-hmm.
Prices have improved a little bit.
Right.
100K maybe.
Something like that here in San Diego
150,
County.
100K.
Right.
I would just say it's a good time to buy still. That's my sentiment. I mean, I'm still buying.
Yeah, put your money where
I've
the
been
mouth
buying
is,
for
right?
the past 5 years.
Right.
It's not about the timing.
Right.
It's about the
Opportunity.
opportunity, the
Yeah.
deal.
Right. That's all that matters.
Yeah. But it's a lot of mind space that it
Mhm.
occupies, right? So that's why we do the work for you, right? I mean, there has to be a basic amount of trust,
Right.
so I can break it down,
Mhm.
because I am an investor.
Right.
And yeah, so I have that mind. And when I do referrals too,
Right.
when I do referrals, I don't just refer. I sold a home in Texas, North Carolina, actually 2 homes in Texas. I'm selling North Carolina,
Nice.
all over.
That's awesome.
Indiana. But when I look for agents, I interview the agents and I say, do you have your money where your mouth is, right? But I
Right.
say nicer, I say, do you have investment property?
Right.
If they don't have investment property,
Yeah,
you think differently.
There's some
right?
rules that you may not understand. Right?
Yeah.
Right. That makes 100%
So that's
sense.
what I look for.
Right.
And then I look for a native.
Okay.
I look for natives and who are investors in their own area, or it doesn't matter anywhere in the
In
US.
general. Right.
In general, and then I do the referral.
Okay.
And so now my buyer or my seller,
Right.
I mean, they know all the movie stars in Monterey now, and
That's
go to all
awesome.
the car shows and the Rolex exhibits and everything, and it's great. It's the way to do it.
Right.
That's what I expect. Excellence. I'm very hard on myself, and
Yeah.
that's what you get. Excellent. The perpetual pursuit of excellence. Anyways, that was a little too personal. Okay.
Nah, no worries.
Anyways, any last words for our viewers
Last words. I mean,
for January?
yeah, for
So
January.
this is for January. We're
Yeah.
gonna meet up. We're gonna meet every month.
Yeah.
And talk about changes in the
For sure.
market, things that are of concern, issues. So anything that you want to wrap up for the month of January? Because we're coming back February, we're going to talk about something else.
Right. I'd say for the month of January, I know a lot of people are motivated with New Year. I know people are excited. They want to finally stop renting, paying somebody else's mortgage, and pay their own mortgage, right? And I think now is a great time. It's a new space where, to me, like I just explained, I mean, interest rates are not a thing to be scared of.
Yeah.
To me, really the equity position is what to be scared of. And right now you can have great equity position because you can have seller credits, you can negotiate a lower price.
The
and
appraisals are coming in higher.
appraisals are still coming in good. So it is a good time to buy. You're going to set yourself up for long-term success because
Okay.
0% of your rent goes off to paying that house. So, it does just for somebody else. And so I'd
Right,
say,
right. And then
no,
you
it's
can
a
move
good
out
time.
in 1 year and then rent it out later.
Absolutely,
Yeah.
absolutely.
What are some maybe pitfalls that you've seen in the month of December?
Pitfalls in December as far as borrowers.
Borrowers, yeah. The bad side.
Yeah,
Let's think about bad.
I say pitfalls in a borrower is, deciding to wait without seeing numbers. Making decisions just based off fear mongering that happens. I think in our industry, it's very common.
FUD.
Yeah.
Right? Fear, uncertainty.
Yeah,
doubt.
yeah.
Yeah.
People, they hear, oh, now is not a great time to buy because TikTok and Google and everything exists, but they don't care to see numbers. And to me, numbers are the most important thing in this world of finances. So
I agree.
I'd say the big pitfall that I've seen is people are now scared of some boogeyman interest rate when they're not seeing the pros, because like I said, there's pros and cons everywhere. So that's a big pitfall, I think.
Yeah. So find a good lender
Right.
and a good realtor who you trust, and then we're consultants.
Right, absolutely. Yeah, we're,
Yeah.
we're here to help with any issue, even refinance, reverse mortgages, all these different
Yeah.
types of mortgages that are available that can really help. It's just a case by case thing. Right.
Okay.
Yeah.
All right. So that does it for January.
Right.
Okay. I'll see you again
February.
and we'll hopefully get you more stats and stuff like that.
Yeah, for sure.
That way we can just kind of update people,
For sure.
what's going on.
You're gonna take me back to engineering school.
Yeah, there
Is
you
that
go.
what you said?
Yeah. Let's break it down. The graphs, right? Statistics,
Yeah,
especially.
Yeah.
Right?
I'll bring
The Mu,
I'll bring
whatever.
the computer next time, and we'll start coding or something.
Yeah, all right. Yeah, I like that stuff.
There you go.
Don't tell me.
No.
All right. See you guys. Hope you guys enjoyed.